Welcome back, folks. 1st of March, new content coming. We're going to be focusing on short-term trading, one shot, one kill. So we're actually in my forte. This is my go-to preferred way of trading. So there's a lot more content. There's a lot more stuff with this one, and it draws on the things you've learned in January and February. So I think you'll be absolutely amazed at what you learned this time, because it's a ton of things that we pulled together from January, February, and plus some really cool stuff that you haven't been taught yet. And plus you get a lot of little new toys for your MT4. All right, so now what we're looking at, this is the dollar index. Now I had to create another account because I had to start the MyFX book, so that way I can access things, because I will be doing trading live with the Robins World Cup, and I need to be able to have access to that on this computer as well. So there was no trading done. You've known that. Nothing's been done. But in the transitions of adding a live account to this laptop, it bumped Forex LTD, so I had to reload it. So now I had to put two different MT4s on this laptop. So I don't have my charts together for this. That's why it looks rather lean. I only have what you see here. So I got to go through the process of getting all that put back together. But we talked about yesterday in regards to the dollar index. We were hoping to see this candle here flip and have an up close. And we did get that, in fact, and I want to zoom in a little bit real quick. Now that we're in March, we are permitted to go down to an hourly chart. So our time frames will be monthly, weekly, daily, 4 hour, and 60 minutes. We will not be focusing on anything less than a 60-minute chart through the course of this month. It won't be necessary to go anything lower than anyway. But in April, we'll go down into the 15-minute and 5-minute. But we eyeballed these equal highs in here. And I said that we would probably, if we had an up close here, we'd make a run on the equal highs, or the buy side liquidity. Equal highs, double top. They don't like to stay in the market very long, and we've seen price drive up. Now you can attribute that to Donald Trump's speech, or you can attribute it to the fact that dollar has not been able to go lower. We were in that weekly bullish order block that I don't have noted here, but it's in your charts, and it's in the recordings over the last few days. So we saw a low, a higher low, and another higher low inside that weekly order block. And couple that with gold. Okay, notice, I don't have gold on my chart here, but this is what I want you to study this morning. Gold made that higher high. Okay, and when it went to 1260, the dollar index was failing to make that lower low. What would that be? SMD's version, yes. So if we're looking for things to draw a directional bias on the dollar index, what we like to use is the gold market, because they're completely and utterly inversely related. There's diametrically opposed price action with gold and dollar. So if the dollar is going to go higher, gold should be going lower, and vice versa. So if we're seeing elements to gold making a higher high, and this is also going along with what you've heard me talk about the last 2 days. I stated that I didn't want to see gold make that higher high, because if it did, it would change the direction for dollar index, and there's a couple things I wanted to see unfold for gold and silver. But because it made that higher high, I already knew that the likelihood that dollar index was making that higher low already with this candle here, it's not going to bode well for a strong gold market near term. It doesn't mean it's topped the market. It doesn't mean that we're trying to pick the high. It just means that it can't rally, and it's probably going to want to retrace deeper and not have that big wide consolidation like I was hoping for. So if we're looking for bullish dollar as a result, and this is the reason why I said we'll probably see this thing flip forward and have an up close, and then we'll make a run on these equal highs. That would put selling pressure on foreign currencies, which brings us to, let's go down to let's start spreading our wings a little bit here. Go down to a 4 hour, and then we'll drop down to a 60-minute. Okay, you can see the equal highs in here. Price has, in fact, rallied up, cleared that out. Now it's going to be interesting if we consolidate in here or if we try to kid back a little bit. I don't want to see it come back down inside this range anymore, because if it does, that's not actually bullish, because we've already been in a consolidation already. We worked around the equilibrium price point between this low and the high of that range. This entire range is defined by this high and this low. So we've worked equilibrium for a while. Tried to get below it each time, went higher, and gold market made that higher high. So we have a smart money divergence for dollar index. I get questions a lot, well, I can see how the dollar helps the trades for SMT purposes. This is for euro and cable and Aussie and whatever, but what do you use it with in regards to itself? Like, how do you get directional bias with the dollar index? Well, you use interest rate markets, but the best one is gold. Gold is what you want to use for your SMT divergence on your daily and 4-hour and hourly chart for dollar index, and it'll ferret out most important price lows and highs. So we've seen price come down, hit this series of down candles, which is what? What are we looking at here? What are all these candles? Bullish order block. Trades right down into the open here, rallies aggressively, right to where the buy stop would be. 1-hour chart, you can see very, very, very aggressive run above those highs in here. So it's nice to see that. My only concern is it was a little aggressive in getting to this level. And I generally don't like that kind of movement, because it means they're reaching for stops maybe to go back into the range or even reverse. So I don't want to see it just go above here today on some kind of irrational exuberance over something that Donald Trump wrote in a speech where he was given and said it, and it sounded patriotic, and now all of a sudden we're looking for a multi-year rally in the dollar index. I want to see something with substance, not just poke its head above an area where we already identified where stops would be. So what I mean by that is we don't want to see it come all the way back down inside the range. If we do that, it doesn't bode well for bullish dollar. It does bode well for a longer-term consolidation, but more likely they'll want to come back down below these lows, and that's not, it's not good. We want to see the market go into a trending environment. If it's already shown a willingness to break above these highs, great. Let's see if it has some legs to keep going higher, because that'll give us long-term downtrends on foreign currencies, and then we can do all kinds of swing trades. Plus, that'll fuel our short-term trades, and they'll be very, very easy to make money with. All right, so let's scoot on over to the euro. Euro, we talked yesterday about how folks are looking for trades, and you're not telling us what to do. You don't give us any ideas, blah, blah, blah. I mentioned that we had a higher high, and I said that we would punch up above here, having a 3-drive higher, and that would be the indication that we'd probably see selling off at that point. If we get a bullish dollar, that criteria was met. It did exactly what we said would most likely happen. Let's go down to a 4-hour. So we go into a 4-hour chart. Here's that 3-drive higher or 3 Indian pattern. 1, 2, 3. So driving higher above these highs and the body of these candles here, that would be the short. We have a nice railroad track idea. Price trading up, then rejecting and trading lower. Really, really nice to see that happen. Over 100 pips given to you there on a silver platter. We moved up into an old area of institutional order flow in here. 1, 2, 3 times, can't find any legs above it. It's got to go lower. This is the fair value gap that we identified as a downside objective. We fell short by, well, let's see if I'm not mistaken here first. The low is 105.26. Today's low comes in at 105.26. So we essentially hit it. We just didn't trade down into it. So the range really should be up touching here. It just moved the box a little bit. So it's already hit the level that we would already look for. So there you go. So over 100 pips there. Let's see. Yeah. The 4-hour we're showing now. Let's look at that 60-minute chart and see if we can pull out anything on that. Yeah, I think we might see a little bit more to close this in. Watch the high on this candle here. at 105.20. That also is an institutional level, so just be mindful that if we hit that, we might get a little bit of a bounce. If it does bounce, we'll probably want to close in this gap from this candle's low to this candle's high. So that would be your fair value gap to fill in. It's around 105.50, 105.55 in that ballpark. But apart from that, it's already moved. Cable. All right, so we talked about yesterday, all the buy stops and all the buy side liquidity has been absorbed, and we would look for a move below this low here and below this low here, and then really try to drive for the sell side liquidity below the bodies of these candles in the form of a rejection block. So, well, obviously you can see the price is already started declining. 4 hour in here expanding, reaching for those levels of liquidity below the lows that we were mentioning yesterday. Really nice movement below here. I don't see a bullish order block in here to look at like, okay, it's a buy. I don't see that in here. I think if it's anything, it's going to be a drive down below this candle in here, the body of these candles. So what we have identified at 2265. So we'll look for 2265 as a downside objective from where we're at right now. Where we are at the moment, we could come back and retest this 2335 to 2340 level. That could be a short-term low, broken support becomes resistance idea there. So just be mindful of that. And on a 1 hour basis, really nice price action there. It's nice to see things finally moving around. All right, so price, look at that little fair value gap in here, closed in. That's nice to see that. Price aggressively trades lower. Notice there's no remaining equal highs in place except for obviously the longer term ones here, this one here, but this one. But there's no real shorter term besides this that it can get to in near, like in close proximity. It's got more likelihood to go below and reach that 2265 level we mentioned as a downside objective before going up and ever consider getting these levels up here. So it's already worked the buy side. It's already taken those people out that are wanting to sell it. So nobody's really positioned to go short on this on a fund basis because they've already been knocked out. So they've been unseated. So now the market's dropping lower in sympathy in regards to the higher price seen in dollar index. CAD hit our level. We were looking for to move above the bodies of the candles in here. It has done so rather aggressively after hitting our down candle on a daily chart. So this is a discount PD array. It's inside of the range from this high to this low. I said that gun to my head, I'd like to see them run above here, above these equal highs. And if it starts to run above that, the next level you'd be considering is over here above the candle's bodies. Not this as a bearish order block. That was never noted as a concern because we've already passed through this once already with this big wick. So you have to go to where, if there's a long wick candle making the high, go right to the bodies of the candle. And that's where it's going to reach for because that's where the liquidity is on the buy side. Now, it doesn't mean that price is going to stop there or that it will stop there. It just means that that's where price will draw to. That's where they're going to look to unload any long positions. Obviously, you know they're long because the price has already been moving aggressively higher. Now, here's the part of the presentation I want to do in closing. I want you to take a look at this price action in here. Okay, we have a low, a higher low. I did not like this in here. Okay, I did not like this low. I didn't see this as a potential buy in here until we got above these candles in here. And you go back and watch the recordings, you actually hear me say that. I wasn't interested in seeing this pair go long until we went above here. We did that right there. When price traded back down, notice there's still a lack of any strong buy for a bullish order block on a daily. What gave me the inspiration, if you will, to think that we were going to go higher? I told everyone to look at Canadian dollar this evening here. Then we saw the price trade here, go through, and now we're seeing a little bit more follow through today. Okay, so we're looking at the Canadian dollar futures contract. And I don't recall what video it was, but I know I brought up Canadian dollar futures contract in recent months. I don't know where it is exactly, but I know some of you that are insanely detailed oriented, which I'm so thankful for because you, you actually helped me out a lot. The highs back here, these equal highs, I mentioned that was a very clean level, easy buy stop liquidity pool. So we would probably see Canadian dollar run up there and hit that. It has done so. All right, so we have the equal highs in here, and price sweeps above it in here. Now, it was rather muddy and real sloppy in terms of it could have went higher if we saw dollars slip a little bit more aggressively, but it didn't, and we started consolidating here. I want you to take a look at what was open interest doing. This is what I was watching the other day when I watched our US CAD pair on the futures market when we broke above that daily rejection block. When it traded above that, when we pulled that lower, then and only then was I interested in seeing it go higher. This consolidation in here, all through this block of price action, okay, this big range in here. This is a daily time frame. I want you to take a look at the open interest, what was going on then. This is that purple line right here. What was open interest doing at the time when this was going sideways? Was open interest declining or was it increasing? It was increasing, exactly. So if open interest is increasing, that measures the commercials offering liquidity or selling it to the public. Now, if Canadian dollar is the commodity, who is the producer or the provider of that market? The Central Bank of Canada. So if open interest is increasing at a time when it's consolidating, that means that we're seeing a heavier position built in, that the banks are certainly comfortable offering that currency. Otherwise, they would be doing something like this, a big drop down like that. And that's why you see this big pop up in the Canadian dollar. Here, all we did was cleared out the buy stops above here, right there. Okay, now this is what I'm trying to tell folks all the time. You don't have to be in at the actual high. You don't need that. You just need to get the meat in between the move. So once we get more evidence in here, building the idea that either they want to go higher or they want to go lower, they'll give you an indication what they're going to do before the big move happens. We talked about Canadian dollar. I told you to look at it, watch it. We talked about the levels it would be reaching for, the equal highs on our US CAD pair. Open interest is increasing during this consolidation. I'm sorry. I heard my son calling for me. I had to make sure that he was okay. Live folks, I'm sorry, it's a live session. You get this, and they're in school, so I have to be mindful. So we had a consolidation here, open interest increasing. This is indicating that the commercials are willing to be selling more of it, and price has already moved to an area of running buy stops. So if we see this, okay, it indicates that there is a strong willingness for the Canadian dollar futures contract to move lower. So if it's going to move lower, that would do what for our US CAD pair? What direction would that be? Exactly. So I haven't had a lot of opportunities to show you where open interest is increased inside of a trading range to facilitate a bearish idea or confirm something bearish, but this is one of them here. The Canadian dollars, go back to the price failing to make a lower low here, failing to make a lower low here. Okay, great, it's wonderful. You can't get the low, you can't get the low, you can't get the low, no problem. I was looking for it to break down here. I was looking for it to break down here. And I wanted to see if it wanted to go lower here, but it failed. Once it failed, this became more influential. And that was what we were looking for. I said when we were looking for price to break down in this area here, I wanted to see it go lower, but it didn't want to do it. But I did not want to be a buyer until we had this area here, these bodies of these candles blown out. Notice that we didn't make a higher high in regards to the wick. Notice that. Go back and listen to the recording. All I care about is moving above these candles bodies. Remember, the wick is not that big of a deal. It's only a big deal when you when you have your you can't see my cursor. Have you always been that? Has it always been like that, or just right now you can't see it? That's weird. Yeah, I'm not sure what's going on. This GoToWebinar is acting up, but it's the high on the daily at February 7th and February 8th. Once those candles, those bodies, I'll put some lipstick on the chart with graphics. The once that those bodies of those candles have been pierced on the 22nd of February, that became an approved potential buying scenario, but I didn't want to buy it without further evidence. And once we traded through this down candle here, formed on the 23rd of February, it was traded through on the upside on the 27th of February. Once that occurred, then we have obviously a reason to suspect price is going to go higher. You're not getting the absolute low when it's muddy. When it's choppy, don't worry about trying to get the absolute low or high, ever. Don't ever try to worry about that. But you can see that there's a large move that's available to you once you see the evidences that there are reasons to suspect it's going to go higher. The equal highs, they were our first target, and if we continue through, we mentioned that there was no necessity to hang our hopes on this last up candle formed on January 19th as a bearish order block, because we've seen all of the down candles, okay, especially the one on the 24th of January. It had a high wick. They traded back almost entirely to the full down closed bodied candle formed on January 23rd. So there was no real solid bearish order block in regards to the daily US CAD. So if it's going to trade higher, it's certainly going to go above the candle's bodies, especially that candle formed on the 22nd of January. And we've done that today. We've pierced it convincingly. It's traded through it. So now we're going to look at what level we would be referring to next, and that's going to become in the form of mitigation block right here, formed on December 20th, 2016. We've already traded to it here on January 20th, but I think we're probably going to make a run above that high, go a little bit deeper into the mitigation block formed on the 20th of December. And then above that, we would expect to see, we have a fair value gap up. No, that's not a breaker. There's no swing high because the down candle is higher. So on the 20th of December, that higher high, it clears out. There's no swing high that's lower. What's I saying? Fair value gap. We have an up candle, price delivered on the upside here, and price is delivered on the upside to that level right there. So we have a little bit of a range we could fill in. So from the low formed on December 27th and the high formed on 134.96 is the high that was formed on December 30th, 2016. I think that may be where we're going to try to reach for. And also, if it's going there, we already know what we are leaving intact up here. What's this up here? All the way at the tops. Right there. So we have double top up here. Huge, huge pool of liquidity on the fund level. So they're going to want to come back up there. If they get to this level here in the fair value gap, that would be, the question is why am I looking at only the last up candle? That's where price broke away from for the high. The highest candle is a down close. So prior to that, the last up candle, we want to use that. That's our reference point where price has left the highest point. Notice that from that last up candle formed on the 27th of December, price makes one big down candle on the 29th. And then the very next candle, it opens, trades up a little bit with a small wick. So in other words, on the 29th, price has been only delivered in that small little range that's been defined as this shaded area. That one candle, that's all you're looking for, that one candle that trades through a specific price level or a range. Once we have that, okay, if you want to talk about zones, like supply and demand zones, Online Trading Academy, Tim Seiden or whatever his name is, or Sam Seiden, whatever his name is, they're the only zones that are of any merit are this: a fair value gap, okay, or closing a void. That if you want to look at that, that's an area that you can call a zone, okay, because it can go up and close in partial portions of that area, but it's going to go to a solid round number or a 5 level inside that range. Okay, so just understand that's how I'm defining it, and that's how you pull out a fair value gap. And I think that's going to be it, because if I go through any more, it's just going to give you guys more interest to put more questions up, and I'll be here for a full hour, and I got too many things to do today. So in closing, just think about this pair potentially going up to that level around that 135 big figure, potentially up to 135.15, maybe 135.20. I'm going to look to get your satisfaction agreement out to you this afternoon, hopefully before I get your afternoon recap video up. If you don't have the email, after I say, I'm going to send you a tweet, let you all know that I have sent it out. Everyone that is going to receive one would be receiving it by the time I give you a tweet saying, okay, start looking for it. If you don't have it within an hour and a half to 2 hours after that tweet, chances are something's wrong, and you'll have to just reach out to me, and then I'll have my son directly send it to you that way. As far as the PayPal and payments, last night I had 300 payments come in at one time. I've never had 8 o'clock transactions, and I think it's because of February being a short month. I don't know how your payments are going to process. So if your payment usually is the 29th, or if your payment's on the 30th, I don't know how PayPal is going to make that transaction. So we don't have any lessons coming out this Friday anyway, so that's a blessing there, because it gives me time to work out what I need to do. I'm only canceling access to the 4 people that have canceled their membership. So I have 4 folks that will be blocked. Everyone else that has had skipped payments, I'm allowing all the way up to the 3rd. Okay, at the 3rd, if we don't have your payments, we'll just reach out to you and say, hey, look, can you just do a direct payment? And if your payment comes through automatically processed, I'll just refund that. I'll eat the loss on the transaction cost. I've done it with other people. It's not a big deal. It shouldn't be that many of you doing it that way anyway, but just to make sure everybody's on board, with the terms of use, we have to have everyone paid by the 3rd. It makes it easier. It saves on all the administrative time and aggravation. So just know that I'm not blocking anybody that hasn't made their payment yet. I'm allowing PayPal to sort out what they have to sort out. But we had a big block of payments come in last night, and I don't know what the payment schedule is going to be today. Usually I get it between 10 o'clock and noon. Last night I got 300 around 8:30 and 8:45. So we may get a wave of payments today, and your payment may process. I don't know the answer to that question. So like I said, this is my first time dealing with them, and this is our first time going through a February. So we don't know how they're going to process it. But don't freak out. I'm not trying to block people to hide stuff from you. Just relax and let's see what PayPal does. If it processes it, today or tomorrow, or certainly by the 3rd. I mean, you have to the 3rd. I give you a grace period. But any cancellations, they get nixed immediately. So you get today's session if you've canceled, but after this, you won't be here you won't have access to get into the afternoon recap video. Okay, so if you're here and you're listening, you've already canceled your payments. I wish you good luck, good trading, but you're done. So apart from that, everyone else will be left intact. Like I said, the 3rd is your grace period, and we'll work with those individuals that haven't had their payments processed by then. And all you had to just reach out to me. I'll let you know when the payments have processed each day, so that way you can keep tabs on what you should have had processed in terms of your personal payment. If it hasn't processed for that particular day, and it's the 3rd, chances are you're probably not going to be in time. So we'll have to make some kind of arrangement where you get it sorted out with me. Okay? And until then, wish you good luck, good trading.